Welcome back to another episode of the Coast to Coast Traders Podcast. My name is Robbie.
And I'm Flexing Joe. What's up,
Joe,
man?
this is round two. What's up? What's up?
But round two, baby. We're doing it again, all over again for you folks because something happened. There was no
it's
Robbie.
Not Joe's fault. It's
No.
not Joe's fault.
It's nobody's fault, really.
It's at least 50-50, but I want to blame OBS maybe. But
dude,
what I said.
It's his fault right there, dude. It's his fault. I'm blaming him.
Oh, he's looking at us a little. What are you guys doing? You know?
Yeah.
But hey, real quick, Joe. I saw you on TV.
Yo, bro, you did. You saw me on TV? Did you see my shiny head reflecting? Is that what you saw?
I was like, I'm like, I know that bald head, dude. I've seen that head before.
Yeah? You're just like, yo, I've seen this before? Yeah, dude. For real. So I was too, man. That's me right there. And that's my daughter with me. We were sitting courtside at the Celtics game on Wednesday night, Celtics Trailblazers. That's my first time ever sitting down there courtside. That shit was crazy, dude. Like, it was so much fun. The energy was off the charts. She got Derek White's autograph on her basketball that she brought with her. Man, like, it was just wild. And then he went off, had his career high 41 points in a game. Then another player, Peyton Pritchard, hit 43 points, 10 threes, 10 rebounds, 10 assists. The first time ever for an NBA player to hit that in a regulation game.
Yep.
And then that's the first time ever two different Celtics players have had over 40 points in a regulation game. So, like, it was pretty wild, dude. It was really awesome. And obviously they won. So, you know, it was a really good time for sure.
That's great.
Yeah.
We should stop the recording and replay.
Are you for real?
Because okay, no,
Are
we're
you
good.
for real?
Okay, no, we're popping. We're popping, baby.
This shit's popping.
My bad.
This shit's popping. Damn.
Okay.
How many times are we gonna do this?
Okay, no. I see it moving now. We're good.
Yeah, we're good.
But yeah, that's cool, man. I'm glad you were able to take your daughter out for a cool, victorious basketball game on her birthday.
Yeah, 15th birthday, dude. It was sweet. It was pretty sweet.
Yeah.
Man. It was a really cool experience. We had dinner down there. Everything was great. It was great. I mean, it's still like a 2.5 hour drive each way, so it was a long night, but it was worth it. I think I got home a little before 1 a.m.
Yeah, I remember you messaging me. I'm like, geez, Joe's gonna be exhausted the next day.
Yeah, for real. But it wasn't too bad.
But so what are we talking about today?
Man, we're gonna talk about why your TA sucks, or why our TA sucks.
Yeah, and so primarily we're gonna be looking at the opening range breakout strategy.
That's right, the ORB.
The ORB.
Yeah, baby.
And we're gonna talk about how we trade it.
Yeah.
Maybe some pitfalls to look for when you're outside of those zones, and basically we're trading support and resistance at its purest.
Exactly, dude. Exactly. Yeah, and for the record, everybody, Robbie's TA is actually pretty good. So
it's all right.
Yeah, he's all right. He's modest. So the ORB, the opening range breakout, you know, there's a few different time frames, right? Some people use it on the 5, some people use it on the 15, some people use it on the 30, and then allegedly institutional traders use it on the hour, the first hour, so 9:30 to 10:30, but they don't call it the ORB, they call it the initial balance. So,
yeah,
you know, you probably heard this strategy or seen a lot of people talk about it. It's pretty popular. I think that the different time frames have their merit, but predominantly we use the 30-minute, right, Robbie?
Yeah, for sure. Yeah. I use it almost. I tried dabbling with like the 5-minute stuff in Globex, but I've decided to I don't want to trade Globex anymore. So
I don't either.
But yeah, 30 minutes for sure on the New York session is what I'm using it for.
Yep. And I have an auto indicator that you guys will see in a second too. That'll mark the high and the low. But essentially, what you're looking for is you're going to mark the high and the low of the first 30-minute candle of the day. So go to your 30-minute chart, mark the high, mark the low. And that's your opening range breakout right there. That's what you're looking for. If you're looking for, you know, a breakout and continuation in that range, away from that range, or you're looking for it to potentially have a fake out and go to the other end of the range. And then, Robbie, what would you say, like, if it's like after like the first hour and a half and we're still stuck in the range, we're probably gonna have a range day and we treat it as such? Would you say that?
Yeah, absolutely. And what I was saying on the first time around is that I don't want to see, well, if I see wicks before the opening range, like the high or the low, if the opening range is set based purely on wicks rather than bodies,
yeah,
then I don't want to be taking a trade on that level when we break through purely because that's where the opening range was set.
Right,
I
right,
want to
right.
be looking for an entry based on the bodies prior to the opening range. So,
Yep.
like right there, that's a pretty tough one once we broke down because we did not get uh, a formal retest.
Oh,
And in fact, when we did retest it, later on in the day, it actually pushed way over, and it ended up being a really great long to take.
yep.
But yeah, you want to be looking for any key levels outside of the opening range, whether they be pre-market, prior day highs and lows. Those are the most important ones.
Yep.
Maybe even like a weekly high or low. And if we can't see price closing, like if we close outside of the orb, but we have those types of key levels beyond them, then I'm anticipating those levels to be a profit-taking scaling opportunity
Yep.
and potentially a counter trade back down to retest the opening range, or pulling back inside.
Yep, exactly, exactly. And so like what Robbie's really talking about here is a prime example of is look how we broke the prior day's low right here on that first push. So when we broke outside of the orb, we also broke the
Mhm.
prior day's low. That's like a double reason for short sellers to take profit. Now with that double reason to take profit and buyers potentially still having orders under the prior day's low, you see we get that resurge back up. This is not clean. And ultimately one of the trade objectives has been taken, which is to break the prior day's low. So this would be, an example of where like, this doesn't exactly fit the criteria. And we're predominantly using the orb strategy in conjunction with other forms of technical analysis, right?
Yeah, absolutely. And by the way, what's the dotted line in the middle of your indicator
Oh,
there?
oh, bro, that's something special, man. That's the belly button, dude. That's the
The
belly
belly,
button.
baby.
Yeah, we're not going to talk about necessarily how the belly button got its name, but one night, maybe just a little bit of the story is one night I was doing some chart reviews and I was feeling good, and
Hmm.
I don't know why I just saw,
Guppies.
yeah, yeah, I saw these little dots lined up. I was like, man, that looks like a belly button, dude. I don't know why. I was like zoomed way in too. I was like, oh, it looks like a belly button right there. The black
Hmm.
chart. I don't know why, but anyways, I just called it. It's like, hey, it's the mid orb. It's like a belly button. I don't know.
Yeah, and so we draw Fibonacci retracements all the times,
Yep.
and so just having that auto plotted for us, it's pretty nice because you can see how that's respected,
Yeah.
particularly on that chart there, quite handily.
Yeah.
Sometimes maybe we'll take a 31 fib or 32 or 61.8 or whatever.
Hmm.
Um, but you can treat it as such, and just like I said, if I'm seeing wicks um, on the opening range, the high or the low, I'm not I'm not treating that automatically drawn level as, oh, this is it.
Yeah.
We want to see price action, respect it.
Yep.
And once we see respect and perhaps a form of a wick and then pushing back through one way or the other, then that's when we can consider taking that trade.
Yep.
Joe, suppose, what happens when you predict price action?
Well, most of the time you get your booty cheeks clapped, bro. You can take a losing trade. but but every once in a while the market rewards you very well for it. And that's
Yeah.
and that's enough to get you hooked into doing it again, and then you're just gonna get clapped again repeatedly. So, it's better to react to price action, read the chart, and jump on board with the larger participants than trying to be the first guy on the battlefield trying to predict where we're gonna go.
Yeah. Yeah. Suppose, when we broke down on the opening range down there and you're like,
Right.
okay, we finally got a strong close under,
Yeah.
and suppose you're itching to join the trend short because you're like, okay, this is what I wanted to see,
Mhm.
and I really want to go short now. And you set an ask right on the opening range low, and then look how far it went because you didn't wait for the candle to close.
Yeah. Yeah. It went about 75 cents against you here on AMD, which isn't too bad. It's not gonna wreck you too bad on the options contracts, but like that's still rough.
Yeah, on futures that could be quite devastating.
Oh yeah. Oh yeah. So like let's look at this. This is Friday the 7th at 10:40 a.m. Let's jump over to this with ES at the same time. Yes, on the 10-minute chart. I got all these Yeah, same thing. Oh, this would have wrecked you. This would have wrecked you. This is
Oof.
a pullback from 20.
That's a big oof.
Yeah, yeah. That's 23 points on ES. No way. That's what?
Yeah.
$1,150.
Mm-hmm.
No way.
But once it closed lower, right, and then you get that red hammer.
Yep.
And then the next candle is pretty darn weak, and look look where we were in pre-market. Right now, we're starting to like base under the pre-market.
Exactly.
That's your entry there.
Exactly, and your 10-minute EMAs start to swoop down here, and you're getting a lot more confluence that shows you that the short is a better opportunity now, right? So you let this candle play out, and then you can react to price action and not predict it. What you see here is that the bulls failed to overtake this candle. So they failed to push higher. They failed to close higher again on the secondary candle. So you can, especially if you're trading with micros, you can kind of assign your risk here, try to get an entry in the wicks, and then target to move lower. And even if you were trading micros, if you got an entry up here, which is can be quite aggressive, targeting low of day, that's 30. That's 37 points.
Yeah.
That's pretty crazy.
Joe, why do you suppose, what's going on there with that big green candle though? Like what's going on there once the pivot was broken and all that stuff? Like,
bro,
what are the people that are in trades doing there?
Dude, they're doing their job, bro. They're doing their job.
Yeah.
And your job is to lock in profit.
What's the job?
Lock in profits,
Lock
dude.
in profit.
That's
exactly,
it.
guys. So when we're in a trend, these really big counter trend candles, especially if it's the first one, is profit taking.
That's right.
So unless that candle closed above the red candle, and that's not quite it, but that's a pretty strong indicator too that maybe they're doing something. But unless you have confirmation that we closed above the prior candle, then we want to look to join the trend.
Yeah. This is a good profit
take that short continuation.
This is good profit taking here. You get that hammer off the low, and then boom, they pop it back up. Right.
Yeah.
Let's see. Yeah, this is another one where they resurge just went up big time, and then this is a big bearish. Bullish engulfing right here. So it's more than profit taking, right? A little bit of profit taking, but not enough to reclaim. It fades some more.
Yeah, those are my kind of favorite counter trend trades. Is when you have a massive engulfing candle like that. Closing over not just like the last candle, but like the last few candles.
Yep. This goes over the prior 40 minutes of price action in one candle. Like this is like this is not like let me go short now. It's a deep pullback. Nah, like
right.
It's probably not a good idea, right?
Yeah, for sure.
But yeah, and you can see it here. This is a good example of it too, though, bro. Like, look, we break pre-market low, right? We close week. We close weekly. We close back up here. That's a weak close, and then they send it right back up to the orb high. So then they fake people out because they break the high of day, and then they close back down under, and then it's like right back down. Like this was just a choppy nightmare.
Yeah, but if we had drawn a little supply and demand zone at the bottom of that opening range, the first green candle under, it didn't close back over the orb, right?
No.
So that was your short entry.
That was definitely a short entry right here at that 57.70s, maybe even 71. And this pushed down on 20 points. So that's a solid.
Yeah, that's a phenomenal ES trade.
Solid ES trade. It looks deceiving because it looks like this little itty bitty bar, but the futures can really pay on those moves.
Yeah, for sure.
Here's another really good one, right? Like, look at this here. This was a 10-minute 9 EMA tap.
Yeah.
I know this, guys, because we already looked at this in the first one. I just happened to get back to it and remember this chart.
Yeah. But you could have taken that trade much earlier on a smaller time frame once it first broke through, right?
Yeah, exactly.
So we're looking on the 2-minute chart we were looking at earlier. We closed strong underneath it, and then you were able to take a EMA confluence trade with very tight risk to the opening range low on a smaller time frame there.
Yep, right here. How about right here? So here's your breaks under the orb. It's pulling back. It's chopping. Makes a new low of day. Goes sideways. Weak pullback right into like this prior pivot. It's there. 2-minute EMA tap flushes. But I think really this was the nice one here too. Right over here that we talked about because, like I said, you're just drifting upwards, but you're not closing above any prior candle's high. So you're not seeing the bulls show you any sense of strength. Like this looked promising at first, and then it's like, well, what happened? The bulls, like they just dropped off.
Yeah, well, how big was the move from top to bottom also, right? And could we have drawn a Fibonacci retracement? Like, what would that have been from top to bottom there? Is that like a 31 point something?
No, it's nearly the 50.
That's the 50?
Yeah, it's almost the 50.
Wow.
Yeah.
Well, yeah. So, I mean, that's still a pretty good area too. So, like, when it popped back over the orb there on the 2 minute there, I'm not usually looking for the 2 minute chart to close above. I want to probably see at the minimum the 5 minute.
Okay.
But you have the bigger time frame EMAs there too, right? So that's like the first big pullback.
Oh yeah, look at the 5, bro. Look at this 5 minute chart. It's a beaut.
Yeah.
5 minute orb breaking bases are sweet too.
You have that that zone drawn from earlier. And so we're retesting the orb, but we're still retesting that micro supply and demand there. We're under VWAP, we're under EMAs, like so many things aligning for you to take the trade. So with minimum risk, if you're waiting for candles to close, and we're not getting stuck in the mind frame of, oh, this is the reversal.
Right.
No, this was the profit taking, guys. This is the profit taking. We're still under all that other stuff. We're going to join the trend. And until they blow back through it one way or the other, then we're not trading the other direction.
Yeah, exactly. And I think too, just the word to the wise here, like on the reversal trades, like this is not the time to be like, oh, we're reversing, right? Like up here, that's not it. Like,
yeah, there's no higher high.
No, you've done nothing here to show sense of reversal. So.
Right.
But look
over here
on your 5 minute chart. Hey, you looking good. You've been working out. You've been working out. You've been going to the gym. You look good.
You're looking nice. Yeah. And like you have confluence there, right back over the orb. Arguably, I would say you could have taken that trade even a little bit earlier too.
Oh yeah.
Like prior to. But if you didn't get the bottom, and we're not arguing that anybody should try to catch the bottom, but let's say you were thinking about it and you just hesitated for whatever reason.
Yep.
Right where Joe's drawn that arrow there, and in that zone, that is the A+ setup to take.
Right. This is a another trade that you can take with the ORB Strat is like an orb low break and base, like reclaim here. So you see it well on the 5 minute chart. We can look at other time frames as well here, but on the 5 minute, you see very clearly we push back up over the orb low, and then we are still closing the candle back above the orb low. Now your 5 minute EMAs and obviously your 2 minute EMAs are bullish, and your 10 minute candle by candle is long. And you see that they fail to flip the 5 minute candle by candle back short. This is awesome. This is a great trade.
And what are we typically targeting, Joe, for our scales? I mean, I know we have our set base hits that we want to hit. Yeah. But say we're beyond that and we're hitting for a higher profit target. What are our next scale points after we're back inside the orbs?
Yeah, I mean, typically we'll look at VWAP depending on where VWAP is, or the mid-ORB. In this case, they're not too far apart, but you can see that when we break over VWAP, there was some profit taking there as well. So other traders are definitely using that. And then if we hold and then we can keep pushing, then obviously if we get near or above the orb high, I personally like to scale before the pivot break. So I would be looking to scale, especially above. I can see that there was opening print respect here. I would be looking to scale in like this. I'll draw it like this range, like literally like right here. So it would have even went higher and I would have been fine with it, but I would have scaled and de-risked,
Yeah, same here. I like to set the target profit if I can just before the wicks, before the top of the wicks, because we never know where that top's going to be. Maybe there's a big order sitting there that wasn't filled, and it's just right, just below your profit target, and then suddenly it reverses in the other way.
Yeah, and in this case, like this is a great example to advocate for scaling a bit early and being certain that you're going to lock profits in, because you know, how demoralizing would it be if you were in this trade from somewhere down here, you had scaled, right? You know, you held through this pullback, or you entered in here, you get this
Yeah.
big push up, and you've moved your stop up on the whole position, and then your whole position gets taken out, and then you didn't scale up here. Wow, dude, this is actually crazy. This is like 17 points difference here. Like, that's crazy from the low of this candle to like the opening print, 17 points on ES. Like, you got it
if you took that entry there, right? What is that?
right here.
1300?
Oh,
The one before. If you took the trade there and you didn't scale on the pivot, like of the belly button break or like above the wick of that last candle,
that's 32
the,
points.
the second one after VWAP, if you didn't scale like there, then you're definitely not doing your job.
No, I mean, you got to do your job. Your job in the market is lock in that profit, de-risk, right?
Absolutely.
That's your job, especially trading prop. Of course, none of this is financial advice. It's all just for fun. That's why the dogs are sleeping, because we're super boring. But that's what I would do.
Yeah. Joe, do you have a scaling plan, like about, you know, how you trade with multiple size or even just one size? Like for me personally, my first trade of the day must always be a 15 point, maybe sometimes 20 point scale on the first one. And then only after that will I give myself the luxury to target higher.
Yeah, I try not to talk about my size, Robbie. You know,
It's a personal nature.
it's a personal. It's personal. It's not light either. No, in all seriousness, yeah, same thing about like, you know, 15 to 20, right, on the first one, especially like you said, near the open or like earlier trades, unless like, guys, most of the time I'm trading NQ, so there we are. You know, I'm looking to you know, lock in that base hit, and then I will only hold it for more like if I feel like very confident that we're gonna have a surge to like a level. Friday would be like a perfect example of that. Like if I go out down to the 2-minute chart, I remember taking this trade short here, right? Like entering in anywhere up here, right at 92. I'm thinking that we're gonna break this low, right? And that's 40 points. So like I remember taking one off for 30, because it's like, all right, like, hey, it's more, you know?
It's more than your base hit. It's also prior to the pivot. We don't know that it's going to bounce
Right.
or continue.
Right.
So yeah, that's awesome.
Yeah, exactly. And that's just the thing, because lately NQ and ES have such a broader range, right? Like the average on NQ is like 450 points right now. Average on ES is like 95 points right now. So the days have been pretty volatile. There's a lot of range and a lot of opportunities to make money, and you don't need to capture like that big of a move in order to capture a lot of money. Like, you know, like even that trade, like this little blip, dude, that's $600 a con. You know, that's like,
Yeah, you know,
that's nothing.
And well, there's been times when I like my first trade, you know, I got the 15 points and then price rocketed away from me. And like you could say on like in hindsight, it's like, I wish I would have held. But I did my job. And if the move really is that big of a move, I can take the next pullback, right?
Exactly. Yep, exactly.
Because there's always another opportunity.
Exactly. There are always opportunities in the market. You just got to be patient, dude. So she does. Market tests our patience. But this was a good one. 2-minute right here, right through the 2-minute 20, knifing back down, right off that belly button, bro. Look at that bit. Look at that belly button.
That's a good one.
Let's just zoom right in on that.
That's nice.
There was definitely
like that's perfect. Perfect.
Perfect, dude. You know, there was no lint in that belly button.
No, they cleaned it out.
Yeah, for
you know,
sure.
It's funny though, because you know, I saw a common theme in my notes this week, where I was bullish again in the pre-market, blah blah blah, and so I was just thinking to myself, gosh, you know what? If you just hit the short as soon as the bell opened, like you would have gotten profit almost every single time.
Yeah.
And so I just did like a quick little back test going back to starting with February 27th. So presuming you took the short right off the bell, it went against you on NQ 6 points, and just on the first minute alone was 42 points to the downside from the open.
Shit. Look at this. What's this move? My God, 484 points.
That's a monster move.
So he's talking about. You're talking about if you went short here. So you're looking at like the 15-second chart, right? Like it came down pretty quick.
Yeah, so this one was not the best example. On the 15, like generally I was looking at the first minute candle.
Yep. Okay.
But since this one pushed back up higher, I did look at the 15 second. And if you just went right off the open,
Mm.
first 15 seconds, it went against you 6 points, and you got a 15 points on the short.
Okay.
So that wasn't so good. But on the next day, the 28th, it was a 6 point pullback and 42 points on the first minute candle. 42 points.
Oh, this one was nasty.
Yeah.
Ooh, and then if you just held and said, screw it, I'll move my stop down. Oh, well, and here's a good reason to scale though, because we broke that pre-market low pivot, right?
Absolutely. But I mean, you could see why I was potentially bearish from the pre-market, but also like you have that pre-market or that pre-market low right there. And obviously it's beyond it, but we don't know that the pivot 2 pivots back is going to be the one that supports or not. So for sure we should be taking profit, at that prior pivot. But like, yeah, let's go on to the next day. We got March 3rd. Similar situation. Bearish in pre-market, and then 5 points against you, and then a 35-point dip on the first candle. So that one feels bad though, because like if you were like super bearish and then you see that happen and then they rip it up like they did, that hurts a little bit. But but still that just goes to show, like you were saying, how volatile it is and how tall these candles really are. Like, without the proper scale on your charts, like, that could be like, oh, maybe that's only like 20-30 points from that range there.
Yep.
But no, these are huge candles.
Yep.
It's a lot of money.
Exactly. It's a lot of risk too. That's definitely
a lot of risk.
You really got to be prepared for it. And one of the things with the VIX being higher, we've talked about many times in the group, is, it's, a lot of people suggest, right? Again, this is not financial advice. It's just a suggestion, is, you need a wider stop because the market's just more whippy. It's more volatile. So, lower your size, widen your stop, give yourself essentially the same risk, but more room to play with. And then, ultimately, because if you're going to have that much bigger range, you could potentially look to hit bigger targets, right?
Yeah, absolutely. And, we don't have to go over the rest of them, but I'll just say quickly, on the 4th, 8 points risk, 35 points on the first minute.
Yeah.
On the 5th, this one really sucked. It was actually a 25-point rip against us on the bullish side, but then it was a 22-point dip. And I'm not talking from like the points that I'm calling out, I'm not talking from like the high to lower the candle. I'm just literally talking from the open.
Mm-hmm.
And then on the 6th, Friday, 6 points pullback for a 50-point dip. It's like, this is insane. And I mentioned this to you on Thursday, and not that I would have actually taken any of these trades, because for me these aren't just simply trading the opening bell is not an opening strategy. But just coincidentally, like if I would have done it the next day on the 6th, I would have been wrecked.
Yeah, you would have.
Or no, or was it Thursday? I forget.
No, it was Friday. Friday would have wrecked you, bro.
Yeah.
So you can't. Yeah, it's not a strategy to just click the short button at the bell. But it was an interesting observation that all those days, were like that, and it was kind of like a precursor for the day's sentiment, if you will.
Mm-hmm. Yeah, for sure.
Because ultimately, even for the day's sentiment, this was non-farm payroll, right? We did go lower, but we ultimately closed higher, right? So yeah, it was a bullish day. It took a really long way to get there.
Yeah, can we talk about your insane monster trade that you have regrets about?
Oh man, now we already talked about this once. Now I got to relive it. All right. All right. So here's what happened. I'm gonna go on the 2-minute chart, everybody. So, and maybe I should go to the one with the EMAs on. Yeah. Okay. So 2-minute chart here. Boom, on Friday. Okay. So we obviously made this big move down. I was looking for a reversal out of this area based off of other TA that I had here. I saw this bullish engulfing. I took this trade here. I took this trade long. I scalped it for like, I sold one for 15, just because I knew I was going counter trend. And then as we pushed up into here, I trailed my stop and I got stopped out fine, right? I switched accounts on top step, and I was watching this to see what was going to happen. And then when we came down here and we didn't break this low, I was thinking we're going to break this high, because I was thinking that if this was a strong high, then it should have broken low of day, but it didn't. And so we pushed back up a little bit. And I was just like watching to see, like, okay, like kind of did I miss my entry here? We push back up, we come back down, and then we can't break, like, just going to zoom in. We can't break. We break this little low here, this little pivot. We break this micro pivot just barely, but we don't break low of day. So I end up getting in at 93, but I think it was actually on this candle. I'm 99% sure it was like right there on this candle.
Yeah, on the first take, you mentioned that you felt there was a couple of problems that you had.
On the first take?
Yeah, well, they're not really problems, but like,
oh,
you said that you wanted to do them better in the future, and so we were talking about the scaling plan.
Oh, yeah.
So
yeah.
So what do you think that you did wrong, or how you can improve on the next time you take this kind of trade?
Yeah, sorry. I realize now you meant the first take, like the recording, not the first take as in the trade.
Oh, not the first trade. My bad.
Yeah. I think I handled the first trade actually really well in terms of I'm going counter trend, let me de-risk. That when I when I de-risked, because I entered in like on this candle here, I got like a 15-point scale. I moved my stop up to this candle's low. So I was like, okay, it will be at least a slightly green trade. I'm fine with that. I knew I was going against the trend, right? So like trading more conservatively went against that trend. But on the second trade, like I really had confidence that we were either going to at least break this high, but like I was thinking, hey, this is the weak high, right? So like entering in at 93 and scaling for 15 points, which is like right here, the high of this candle, although it felt good to hit the scale trigger on like within 2 minutes, it's silly because I should have at least had a scale trigger up here in these upper wicks, right? Even if it was like right there. And so that would have been, an additional like 15 points here on this first con, right? Which is another $300. But then I was still in this long, I was trailing stop. And then, based off of, and I'm going to just duplicate this real quick. I'm going to just like show you guys exactly what it was in 43. Okay. So then after that, and I knew Powell was going to start talking at 12:30 exactly, I moved my stop up to lock in 50 points. So when I almost got stopped out here, I was like, yo, that was like really lucky, right? Like, damn, because Powell can go like this. Powell can just be like, and the market will move 100 points,
Yeah, absolutely.
So I was just like, all right, whatever, right? I got lucky. So then I got this, like, you got this huge green bar. So I was like, yeah, we're going to move this stop up for sure, right? And so I remember moving my stop up and being like, yep, I'm going to go right here, right? And lock in another 40 points. And then I started to think about what we've talked about before, how risk reward should evolve when you're in a trade. And you have to think about like, well, how much am I really, really willing to give back versus like how far am I really thinking this is going to go? And I was thinking ORB low VWAP area, which we have a lot of confluence of stuff going on right here. Opening prints right there. Everything is like right there. Yeah. But like, it was like, how much are you willing to give back? So when we made this high, I was like, okay, I'll risk 25 points now. Like, because I felt like the market gave me so much more. I could have had an unlucky stop out here. They already gave me so much more. I'm going to lock in another 1,200. So that's what I did. I set my stop there. Of course, that was quite silly because looking at it, like I was just kind of playing a really tight risk reward, and it went up over another 100 points from it. And that was just like too tight of an RR because I knew I was targeting that, and I should have probably kept my stop like here.
Yeah, and then another thing we talked about too was like, okay, let's say Joe wasn't in the trade from the bottom, right? In the place that he took his stop, we should be thinking to ourselves like, if I wasn't in this trade already, is this a place that I could take this trade long, or I could take the continuation of this trade, whichever direction it is, according to my strategy, whether it be EMAs or whatever it is.
Right.
And if the answer is yes, then also weigh what is the risk to reward, like how much am I still risking versus what's potentially left on the table based on VWAP or the opening range or whatever, right?
Right.
And then on top of that, another thing that we've talked about in the past is like, well, let's say that I'm in this trade and I think it can pull back, and I'm actually fairly confident it's going to pull back. Well, then another thing you can do is just take the profit higher, and then when it does come back, your entry is so much less risky because you've already you were in from quite a low range, so you've already padded the account, but like the delta between where you took profit and where you're entering your new trade, I mean, the trade is going to be virtually free anyway. So this is a place where either you ladder in and add another position, or simply, if you took profit higher, you retake the trade.
Exactly. And then like you can see too that like roughly where I got stopped out, they come back to that same area, and it's almost as if to say, "Hey Joe, not only did you mess it
Remember
up,
that one time?
Yeah, remember that one time you got stopped out over here, and then you didn't retake it? Well, it happened again." And like I wasn't here at the desk for that. Like I was like, "All right, that's a great trade. I got lucky. I locked in an additional, 60 points, $1,200. Like I'm good, right?" Because it still ended up being plus 2,700 and some change on the account. Like what more do I need on a prop account, right? Like that's fantastic.
Yeah, an awesome trade for sure.
Yeah. And
did you locked out, right?
Yes.
Yeah.
Oh yeah. Oh yeah. Like I did my job.
For sure.
So yeah. But like that was obviously a great place to potentially enter. We talked about like this was really nice where they're holding VWAP, and like this is your ORB low break and base reclaim here. Like you're breaking over, basing on it, can't close back below, right? Because they tried that, it failed, they shot it right back up. And then here's a good example, here where they get the pullback a little bit more challenging there. But this one was the really good one where your 10-minute candle by candle flipped for the first time. And it flipped right into the EMAs. It flipped right into your 10-minute 9. But you get the 2-minute EMA reclaiming here. Sorry, the 2-minute candle by candles reclaiming. You're still holding the 2-minute EMAs. And this was a great place to enter here in this wick in the EMAs. You're risking this low here, so it is about 25 to 30 points depending on your entry, right? But your first target should be this pivot area here. So this is 60 points. So if you were risking 30, you were targeting 60. That's 2 to 1. ORB high would definitely be the next target. So that's another 25 points, right? So,
and I also love how the bottom of that pivot there is kind of the top of the pivot if you go left a little bit. Like it's not perfect, but like it's pretty darn close.
Oh yeah, you got all this. You mean like this right here?
Yeah. Yeah. So if you'd like just done a little box to chop sort of thing, or depending on a different time frame, you could have definitely had a little supply and demand zone drawn there.
Yeah.
And that's a pretty perfect flip there.
Absolutely. So that was a great trade. If you were super late, and even being late like this, they're holding the belly button, right? They're holding the mid-ORB, and you get another big surge. And this is one of those trades that's absolutely crazy, Robbie. Like if you think about it, right? If you had like one mini and you just said, "I'm gonna hold it to the ORB high," right? 2, 4, 6, 8, 10, 12, right? So in 12 minutes, the market gave you like 100-ish points. Even if you didn't get perfect entries, you could say 90. It's pretty wild. It's pretty wild.
That is wild indeed, guys.
Yeah, even if even if you just had one micro, right? That's $180 in 12 minutes. Hell.
Yeah, for sure.
Right?
Yeah, one micro that does a lot in this current environment with how big the range is.
Exactly.
We don't know how long it's going to last, but a lot of people love it. A lot of people hate it.
Exactly.
But why don't you guys tell us in the comments below if you're trading the opening range break strategy, or what else you guys are using?
Absolutely. Yeah, for sure. You want to cover your trade real quick? I know it was the day prior. You took a good double short here. I think it was right here in this range.
So yeah, actually, I thought that I had maxed out red for the day. And what had happened, it's just a little bit of dumb luck, guys. Sometimes the luck is in your favor, where like maybe you'll take a good trade and it's on the practice account, and sometimes you'll take a bad trade and it's on the practice account. And that's exactly what happened to me. So what I had done is I had taken 2 trades long around this area, and I failed to really understand what the market was doing to me. And not only did I take the first trade was actually decent. So you see that doji on the pivot high break around after the tallest green candle over to the right. That one there. I took a long entry. Yeah, I took a long entry at the bottom of that candle.
Yep, I remember
So
that.
I don't entirely hate that. But the problem was that I got stopped out. So when I took the long trade there, my stop was technically correct on the candle, but where I messed up was trying to take the same long sentiment when price closed below that. So that's like basically me being stubborn, refusing to acknowledge what's going on the chart. And then I have, my risk generally is 20 points in the day, or about $420, plus or minus with some slippage. And as a result, I'm looking at my P&L and I see I think I have $20 left. And so I go to my risk settings in Top Step and I make sure that not only is it set to liquidate, but liquidate and block.
Mm-hmm.
So at the very least, I'm already in shady territory here. I got $20 less. I should really just walk away because I've done it. I've walked away for much less than that. If I'm down like say maybe $300 in the day, I've walked away.
Yeah.
But I decided to take a micro, and then I look at my P&L and it says, "Hey, you're only down $20 in the day." Well, what the heck?
Yeah.
Well, that's when I realized I was trading the practice on those two losing trades. So by dumb luck, I was able to take a short trade. So what I had done is I went short on the next few candles over, right around after that green one, I think.
After this big one?
No. Right in the first candle where I got stopped out, like right there. Yeah.
Yep.
And I was actually executing on the 1 minute.
Yep.
And I went short. And per my rules, I can risk basically 20 points on the day. And at the time, I'm thinking to myself, I mean, I already thought I was blown anyway. So not that I was feeling like this is like a revenge trade. Haha, I the luck worked in my favor. I can do it. Generally, I trade one contract at a time. But if my rules allow me to risk 20 points, I took a second contract there. And it actually scaled in lower than my entry by like maybe 5 or 6 points on NQ. And the first scale was somewhere between 15 and 20 points. Actually, I can look at my log here really quick.
Yeah, I think the first scale
for my
was when
rules,
you broke this pivot, right?
Yeah, so I generally want to do that regardless, especially when there's size. So my entry was the first con was 441.50, and then I added at 44. Or no, the first one was 44.725, and then I added at 441.5. So my scale was $370. So a little bit over 15 points. I marketed the close if I remember correctly, and then I trailed the stop, and then on the second con I took a flat 30 points, so $600 locked in, and after that I locked out the account, thanking my lucky stripes that I was a buffoon, and I didn't realize I traded on the practice account. I got lucky making a mistake on the practice account rather than my express funded. And I, $900 locking it out for the day. Yeah, sure, it went further, but from going to from the mindset of like, oh, I had just blown my day, to realizing like, hey, no, I still got $400 in my pocket. Let's go.
Yeah.
I'm not gonna try to take another trade and potentially give it all back. So I locked it out for the day there.
Yeah, dude, I gotta commend you for that, because that's like incredibly smart, man, to just be like, hey, I recognize I got lucky here, so I'm just gonna I'm gonna take advantage of it. And then you very quickly, because this is not a lot of time difference here, so like very quickly you realized what was going on, you saw an opportunity, you stepped on the gas, and then you basically were like to the market, yep, thanks, that's mine, bye.
Yeah, and I marketed the entries too with 10-point stop loss, so it's like that wasn't a lot of wiggle room, but like it was already starting to work, and it's just one of those situations where I got lucky.
Yep.
I was in the right place at the right time.
Yep.
And it just worked out.
Yeah, for sure, man. For sure. Fantastic trades, dude. That's really smart, locking it out. And that's, It's kind of really how I felt about the other trade. Like I didn't want to give back more than 25 points, so I already felt like I got super lucky. It was like, do I really want to give back more than $500? Like that's what I was hemming and hawing about, was like, and same thing. Got it. All right, fine. I'm tagged. I'm out. Locked. Like the count was like, it was just like order filled, like lockout, apply, boom, like 10 seconds later,
Yeah.
No
and
hesitation.
It's like, that's basically a one and done trade for me, 2 contracts. And like, yeah, sure. I'd been at the desk off and on because I'm trading at work. But like, say that was the opening bell, or like maybe the first 15 minutes of the market.
Yeah.
I would still absolutely consider walking away from that.
Oh,
and if you made that much money in 15 minutes, why do you need to sit around for another 2-3 hours to try to make another $300 or whatever? Like, what's good enough, right?
Yeah, exactly.
And that's more than good enough.
Exactly, dude. More than good enough. We
Yeah.
had some good trades this week, so hopefully we have some good trades next week or this coming week. Starting tomorrow. Tomorrow's Monday.
Yeah, we got a big news week coming up, man. We got JOLTS jobs on Tuesday.
Yep.
CPI Wednesday.
PPI
China.
Thursday.
Yep. PPI, and then
UOM, University of
consumer
Michigan.
sentiment, baby. Yeah.
Yeah. Bro.
It's gonna be hot.
It's gonna be hot and heavy, bro. It's gonna be sweaty. Gonna be sweaty. So to come full circle here, right? We're back, just want to, cover again with the orb, right? Marking the 30-minute high, 30-minute low. You can back test and try the 5, the 15, and the 1 hour. I do like to mark the 1 hour, and I can quickly give an example of like where marking the 1 hour was, I believe was advantageous for me. I think there was 2 examples this past week. So here was the initial balance low. And so this would be the 1 hour. I remember this, like this nice basing here. And then it does come actually up to the orb low. Wasn't expecting that. But, this drop and this drop were nice off that level anyways. That was one of them.
It was such a nutty day on that retest. And like, nobody knew how much further it was going to sell. That was just bonkers.
God, dude. 500, that's 500 points, bro.
Yeah, I know.
Holy shit. Dude, from what was this already? This was a 1,000-point
day.
Good God. Oh my God, that's so nuts. That's so nuts. And then here's a good example of it too, right? So I think so this was your initial balance low here. You don't ever break it, you come back. And then that one I remember, well, I do remember this one actually, but look, even here, if you mark the initial balance high, you can kind of see how they're trying to reclaim and hold over that level. But this one was the big one here. So we made the initial balance high on this candle. So hold on, I got so many lines here. Let's clean this up. We're frozen. Green alert. No. Clear drawing set. Yes. Okay. So here's your initial balance high on this level. And I'll zoom in for everybody in a second. I'm just going to make a line. So on the 10-minute, this was the thing that I was watching, was that like we just put in the initial balance high up against the 10-minute 200 EMA. And we just had like a weak close over it following these dips. And it's like, this was indecision. This was weak. This closed back under. VWAP tap, closed right back on it. And it's just looking weak, sets up that lower high. When we closed back under, it was, honestly, a fantastic short to risk the high of day. But that's huge range here, though. Like if you went short here, even risking this pivot high, that's 46 points, dude.
Yeah,
it was hard. It was definitely hard to do.
For sure.
But it was sweet, definitely sweet. And actually, bro, you know what I just see here now? We mark the sessions high. Here, we went down to the low of day. Yeah, it was like golden zone too.
Ooh, wow. Yeah, that's nice.
That was pretty nice, man. There was a lot of confluence short right here, and that was nasty.
Yeah, and like we talked about too, though, is like, we're outside of the opening range, and obviously that's a massive move to go outside of the opening range.
Right.
But there's still a lot of pre-market levels that we still didn't clear.
Right.
So like you said, you have a lot of confluence there. You have previous levels. You have the 200 EMA.
Yeah.
Showing weakness. You couldn't close higher than the last pivot on the 10-minute candle. So a lot of signs pointing to weakness there. It's hard to catch the top, but on a smaller time frame, it could have been easier to take that trade.
Yeah, and good market structure analysis here too, right? Is you make this high, right, and then you have this, trying to hold a higher low here. When then you make this lower high, which lower high is going to come down to break the lower low, and then where's it probably going to go? It's going to go to the bottom of this range, and it just cuts through it like warm butter, Charles.
Yeah,
warm butter, baby.
Does he even watch?
I don't even know. I don't know. Maybe he will. He will. But all right, yo. What are we at? We're at 50 minutes. Damn it, dude.
We did it again.
Damn it, dude. We said we weren't going to do it again. We went 50 minutes. We went 55 minutes the first time, y'all. Okay.
But that's the thing, guys. Like, we love what we do here. Like, we love trading, and we love talking with each other about the stock market.
Yeah.
And we can really condense this thing down to 30 minutes if we have to. But like, when we're just feeling it, dude, like it just comes natural for us to just keep talking endlessly and endlessly. So like, I don't know. We're just gonna keep doing what we do.
Yeah.
And if you like it, smash the like. If you don't like it, smash the dislike.
No.
I mean, if they don't like it, but
no, don't you dare.
You'd have to be a real.
I will come to your house. I'm just kidding. I'm not coming.
You're a bad person if you smash the dislike button.
That's it. That's better. But for real, yeah. Obviously, it's always great. Make sure you subscribe though, because we're gonna give out a combine at 1,000 subs, and a Top Step combine 50K to be specific.
Yeah. The faster you guys like and share and subscribe, dude, the quicker we get there and start handing out Top Step combines. Let's do it.
That's it.
Maybe we'll do more than one. Maybe we'll do a few. I don't know. We'll see what happens.
That's it. And if you hit the dislike button, we'll give you an Apex discount code, which is useless.
Oh, easy.
All right, everybody. Thank you very much for watching. Hit us up if you have any questions. Right?
See you on the next one, guys. Later.
See you guys later.